Hi, I'm Sumaira Abdi, and with me I have our equity CIO, R Srinivasan, Dinesh Balachandran, who's our head of equity, and Prasad Padala, who'll be managing the SBI Innovative Opportunities Fund. And, just the fact that four of us sitting here in Mumbai are able to speak to all of you in all corners of India really is because of innovation, isn't it? So the digital camera, the satellite connectivity, and you're probably watching this on your mobile phone right now. What is it if not innovation? Right? So you can see everywhere you look, you'll be able to see some form of innovation. You'll find it changing and improving, in terms of processes, technology, or services. And, if not improving your life, at least they're making it more comfortable, right? So how does this translate into an investable opportunity? Prasad, so first let's start with what is really the concept of this innovation fund?
Sure. So like you said correctly, so we see innovation everywhere. I mean, it's not happening, just in one sector, it is happening across sectors, across geographies. So think of it, for example, somebody like a Tesla or Netflix. So they came out of nowhere with a completely new business model and disrupted the existing business model. And if you see the kind of value creation that these guys have done, or if you look at the stock returns in the last decade, that's mind-boggling. And we believe that is actually happening now in India. And the good thing is that we are at the cusp of it. And we see that next decade, we see a lot of these innovators emerging and taking market share from the incumbent players. And our strong belief is that if you look at the Nifty constitution the next decade, like after 10 years, I think it will look very different. I think you will see many of these innovators taking a place there. And we want to be positioned aligned to this trend. And we want to, and I think this fund is a perfect opportunity for investors to play this trend with us. Yeah.
But Prasad, everywhere we look, okay, the one thing that shouts out to you everywhere is new and improved. Everything is new and improved, right?
Yeah.
So in terms of an investable opportunity, what is the yardstick to judge innovation?
Sure. So, so in our case, basically we are defining innovation based on three parameters. So one is we're looking at product or process innovators. So these are companies which are coming with a new innovation, with a new either new product or a new service, which could potentially disrupt the existing status quo. So for example, it could be a tech company coming with a new platform, or it could be let's say a pharma company coming with a new drug which is completely different from the existing ones, or it could be some groundbreaking product by an industrials company which can actually take market share from the existing players. So that is number one. And second set of companies, we are looking at process innovators. So these companies, so they need not actually come up with an innovative product or a service, but just through using innovative processes or operations, they can actually potentially take market share away from the traditional players and can actually create value from that point of view. And finally, the third bucket is with looking at innovative adapters. So these companies are, so because you can't be first in everything. I mean, there will be one innovator, and then if you can actually find that opportunity in an early stage and can actually pivot and create value for you, I think that's a very good quality. So for example, Google, for example, so they're not the first ones to launch a web browser, or they're not the first ones to create the search engine, but they were, and they're also not the first ones to create cloud, but they were able to adapt, they were able to innovate, and they were able to take market share away from the other players and become the market leader. So these are broadly, these are three buckets we are looking at in terms of defining our innovation.
Okay. So the first one through the wall usually gets a bloody nose, and the next one learns from their mistake and adapts
that is true.
better.
Yeah.
Okay. But Vasan, I don't know for how long, probably since the Industrial Revolution, everyone has been innovating, right? It's an ongoing process. It's not like, something has dramatically changed now. So why now for this fund? I mean, why look at launching it now? What's so good about this time?
It's not like we are timing this to perfection. So
No, sure.
That's a tough answer. But don't you feel the pace of innovation, disruption, risk of disruption is kind of increasing by the day?
Yeah, I'm tired of paying for a new phone all the time.
Oh, that's because you want a better one. Yeah, but that's also innovation, right? So, and technology evolves at an exponential pace. That's like a matter of fact. And I do feel, and I'll bet on this, that the pace of change that we've seen in the last few decades, I think the next few decades will be a lot more. So clearly, I won't say there is no better time, but this seems like a very good time to be betting on companies that are innovating, identifying risks of disruption, where I think mortality, for example, will clearly increase as change happens. So this looks like a good time. And also, I would add, given the buoyant public markets, it's not like a lot of these companies have been raising private equity, and some of them have come into public markets. The private equity guys have made a lot of money, and the public market guys, depending on which stock you're looking at, have also made money from those levels. I reckon we will see some of these companies bypassing maybe not the first round, the second round, third round, and coming earlier to public market. So from that perspective, from a supply perspective also, I think these are interesting times.
So there'll be more money left on the table for us investors.
I hope so. It'll be risky because you are betting on change, right? So you bet on change and you go wrong, that's risk, but you can also make a lot of money. But I'm hoping that there'll be some bypassing of private equity so there's more money on the table for people like us.
All right, Prasad, within innovators, right? Now we have established that everybody is constantly innovating, good or bad, is left to be judged.
Sure.
But within innovators, how are you going to select stocks? Like, what will be your bottom-up strategy?
Sure. So we believe that, so within our universe, so we would be taking a very bottom-up kind of an approach because particularly in this set of innovators, so it is very important to pick the winner. So I'll give you an example. So for example, if you look at the food delivery space, so at some point of time, there were almost like 20 competitors. I mean, if you include all the ones which died and got merged. So imagine investing in Zomato, Swiggy versus any of the other ones. Returns would be like dramatically different. So we believe that it's very important to pick the winner. And so we actually aim to do that. So we will actually look for resilient business models with a very high competitive advantage and strong business modes. And second, we will look for growth and longevity of growth. So that is very important to us. And third, we look for potential for cash flows and return on equity. And this could be a slightly tricky one because most of the new age companies that are coming, so at this point maybe they're making losses because they're at the business at the beginning of the business cycle. But we look for companies which have the unit economics in place, where we see them making when they start making money, actually they should make loads of money. So that is those kind of companies we look at.
Oh, I like the sound of that. Okay, Bala, but invariably companies like these, right, the valuations will be sky high. So how do you sort of align that in a portfolio?
Yeah, so I'll answer this in a twofold manner. One, let's start with an example. Google bought YouTube in 2006. I think the valuation at that time was around $1.65 billion and revenue of YouTube at the time was $15 million. So more than 100 times revenue. And I remember a lot of people in press talking about how expensive this acquisition was, right? Now you fast forward to 2023, the revenue from YouTube for Google was close to $30 billion. So you're talking about a 2000x jump in revenue in slightly more than 15 years essentially, right? That is the kind of growth that you can get in some of these companies. So the valuations obviously matter, but I can argue that in this space, what matters more is getting the right business model and getting the right growth profile. Because in that case, even sort of optically high valuations can take care of themselves. So that is something that we would want to do in this fund. Get the growth profile right, bet on the right company essentially. If we do that, we are going to be fine. And two, when you think about these high growth companies, they also go through significant corrections. In fact, you just have to go back to 2022 when a lot of the high tech companies in US saw significant correction. Now, if you are well prepared, you will take advantage of these corrections. So even these really good companies, you will get opportunities once in a while where the valuations become much more sane and reasonable. And if you are ready, if you are prepared, you should be able to take advantage of that.
Yeah, I like your use of the word sane. Okay, but Prasad, when we speak of innovation or innovators, naturally it comes to everybody's mind that they're talking about technology companies, but that will not be the case here, right?
Actually, this is a slightly tricky one to answer, but let me give you a long answer. So let's say if we look at our universe, so there are actually I'll divide it into three buckets broadly. So one, so there are pure play tech companies. So let's say it could be a platform company, or it could be a cloud player, or a software SaaS company. And the second bucket is some of the companies which are traditional companies operating in traditional landscape, but using technology to innovate. So for example, let's say if you think of Netflix, I mean, end of the day, it's a media company, but it's just using technology to differentiate itself. Or it could be a FMCG company or a consumer company using e-commerce as one of its channels. So there would be a lot of these new age companies which would actually fall under this second bucket. And the third bucket is actually the traditional companies which are just innovating through, let's say, R&D. For example, let's say a pharma company, which could be, let's say, continuously launching new products, innovative products, or it could be an industrials company coming up with new innovative products. So I would say there would be a fair flavor of technology, because the first two buckets you see a lot of tech companies out there, but even the third one, actually we see a lot of innovation happening outside technology. I mean, you take in case of autos, for example, with electric vehicles, or it can be industrials, or so there are innovation happening across the sectors. So I think there would be a fair representation from across sectors. So this is a multi-cap, it's a multi-sector fund, multi-cap. And then, like I said, there will be a fair representation of technology, but we will try to diversify across sectors.
Okay. So, Vasan has given us some sort of idea about what kind of flavor would be there, but can you give us some broad themes that the fund is likely to focus on?
So remember, when he's talking of technology, technology is a lot more broad-based than the typical IT service companies that we are used to. So I do reckon, and Prasad is alluding to it, that technology will be a common factor even among the traditional companies. But the clear themes that we will look to play, for example, you have e-commerce. Quick commerce suddenly seems to be a lot more attractive than what I would have thought a year back. The ad tech, you spoke about YouTube, right? And we're looking at streaming, for example, music streaming. That's a very interesting ad tech option. You have what else? EVs. You have renewables. We just met a paper company, which is as traditional as it can be, thinking in terms of innovation and having a circular loop so that the product is sustainable. So something that is compostable, for example.
Right.
Right. So I think there are interesting options. I'm not even talking of hydrogen, which are like a few years away from. So I think a lot of interesting themes to play.
So it will be pretty diversified in that sense.
I would think so. Despite being technology being a common factor, I would reckon that these will be delivery. You spoke of quick commerce, but logistics delivery is also, there is a good bit of innovation.
Yes. Okay, but Bala, when they're speaking about these sectors, an investor would think that such and such sector already has a sectoral or thematic fund, or if nothing else, a well-diversified equity fund would have a lot of these stocks, right? So where does this SBI Innovative Opportunities Fund, which is a thematic fund, fit into the bouquet of the SBI MF bouquet?
Right. When you think about this fund, right, this is a growth-oriented thematic fund where we are specifically trying to focus on innovators, innovative companies. From that perspective, it's a very concentrated theme that you will probably not see in a diversified portfolio, because diversified portfolio will be a mix of multiple types of companies. Here, we are specifically trying to harness the power of innovation. From that perspective, it's a powerful thematic fund. Now, when you think about any thematic fund, it is inherently high risk, high return, which means that this fund, I suspect, is not for the beginner investor. This is not for someone who is new to capital markets and just wants to invest in a fund. This is meant for experienced investors who understand the power of growth, who understand the power of innovation, and they don't mind the volatility that comes along the way. Because what we've seen this time and again, even if you look at the big tech winners in US for over the last 2 decades, they've made fantastic returns, but it has come with volatility. So anyone who is thinking of investing in this fund should be mindful of that. It is one where the inherent potential for returns is very high, but you also have to be prepared for the higher volatility that one might see along the way, essentially.
All right, and for somebody like me who should think of myself as a tech dinosaur, I think it's time for me to also upgrade myself. All right, guys, thank you so much, and all the best to your team and Prasad, especially to you.
Thank you so much.
Thanks, Sumaira.
Thanks, Sumaira.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.